Yo, what's going on YouTube? It's your boy Kyle Chartbully back with another video. Hope you guys doing well, taking care of yourselves out there. In this video, I'm gonna help you guys find market direction. I'm gonna help you guys get clear biases, so when you're trading, you're not confused, you're not scatterbrained, you're getting faked out. You know, like I always say, you gotta do your planning beforehand, but I'm gonna give you guys three steps that you can use right now, and that's gonna take your trading to a whole nother level. So what do I mean by that? So, you know, you're looking at the chart, you know, you're doing your top-down analysis, you're looking at the daily, you're looking at the H4, you're looking at the H1, and a lot of times you get conflicting views. Not everything always lines up in the correct trend. So for instance, if we're on the daily here on GJ, long term, you know, this looks bullish on the trend line, right? But short term, you know, it was bearish right here. Do we wait for the breakout? How do I know it's really still going up? Do I use the trend line to respect the long-term bullish orders? So I'm gonna give you guys three things that I do so you can get clear on your market direction and so that you're not faked out every day. So first, why am I typing in red, man? Let's make this a little bigger. All right, first thing you want to do is locate liquidity areas, aka key levels. So you might have heard this before, but the market goes back to certain price points all the time, and you need to know where the most likely target is. So you just have to figure out where they're at currently and what's the most obvious place they're going, right? So number two is identify a swing pattern. Swing low or swing high. So I will tell you more about that in a little bit. And third thing is you need to look at market structure on the H1. I'm more of an intraday trader, so this may not apply to you guys who are trading daily, weekly, or monthly position holders. But you know, if you're me, if you're looking to trade 1 to 2 times a day, this is what I use. So first thing is locate liquidity areas, aka key levels. So let's go to the chart here. I have 2 yellow lines right here, right? 136.790 and 134.127. Both of these I have as key levels, aka liquidity. Why do I have that? So look at all the wicks. This is just support and resistance as well, but look at all the liquidity, and this is on daily, so you know this is a major level. Look at all the time it rejects, trades through, bounces. You know, this is an area I want to watch. This is what I want to see. You feel me? So 136.790, the same thing, nothing's changing. We're looking at wicks, we're looking at places where it's rejecting. So if I was gonna do this some more, I'd probably plot it like maybe right here, then up here. If I was going below, like right here. So it makes it very easy, and I only use the daily for key levels because I don't like 1,000 lines on my chart, and the way I trade is if it gets to a daily level, like I know it's about to make a major move, right? So we did that, right? Identify a swing pattern, swing low or swing high. So what do I mean by that? So I'm gonna try to draw this for you. So a swing pattern is when it's like a 3-bar swing. So we got one right here, and this would be an example of a swing high. Another candle to the left below it, a lower high, and then another lower high, right? why do we use this, or why do I use this? It's because the market came to an area and now you can see the turn happening in the market, and it's on a daily level, right? So what you want to see is another candle actually break below that, you know, after that swing low, and then you can confirm a sell. Once that gets there, right? And you just do the same thing for a swing low. It would just be the opposite. So same thing. We have our candles here, right? Then we have one right here, one right here. Another candle breaks above it. You know, I'm buying. You feel me? Yeah, you get the gist. But a swing low or a swing high is what I'm looking for on the daily. And you can see instances here where that happens. So lower high to the left, lower high to the right. You know, I'm looking for that sell the next day. Boom, we got a big sell. And it's not 100% accurate all the time, but it's a clue on where the market might be going. So, and you can see it happened in inverse right here, another swing low right here, and now we're heading back up. So really, when it's really going, you want it to be something like this: lower high to the left, lower high to the right, and then every day we're trading below, 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 until when? Until we get to another point where it could be turning, right? It doesn't mean you get right into a buy, but you know, you can be on guard on what it might do. And then the third thing I have is you look for market structure on the H1. So on a Telegram group, you know, every day I break down the H1 time frame along with the daily, because I think that's the best way to find your intraday market structure, so that you know what you're looking for the following morning whenever you wake up to get on the chart. So, you know, you go to the H1, and for here, I'm thinking for GJ, it's gonna possibly get back up to this 136.790 level. So for me, on an intraday level, I want to see these lows respected right here, and I want to see a dip right here, maybe a W pattern, or maybe some wicks spiking down, showing that they're trapping the sellers and they're getting ready to make that move, you know what I'm saying, back up into that range. So you're looking for market structure on H1, and you want to have your analysis in place. So if your analysis is invalid, then you're okay with that. But for me, I stick to my bias until it's invalid, just because I think it works better for me. Everybody's different. Some people can change their bias on a whim. That's cool, but I like to have a game plan set before I get in the market and try to execute that to the best of my ability. All right. So, I mean, if we break these lows and the bias is valid, then obviously the next set will be down here. But for the buy, I want to get up here to that level and break these equal highs, because I noticed there's some liquidity trapped up there, and we have a major level up here. So I mean, that's really it, guys. Nothing too long. Just to recap: locate your liquidity levels, aka key levels, liquidity areas. Excuse me. Identify a swing pattern, swing low or swing high. Go back in the video, look again on what I mean by that, and then look at your market structure on the H1. If you guys need me to break down market structure more on the H1, I'd be happy to do that in other videos. Just let me know in the comments. But that's really it, man. Hope you guys have a good trading week. Stay safe out here. If you have any questions, hit me up on YouTube. Also just started a a Twitter, a Twitter where I'm breaking down the analysis as well. Join the Telegram group, it's free. I'm going to be trying to give signals out actually on Twitter instead of the Telegram, just because I can do it quicker. So yeah, that's about it, man. Hope you guys stay safe out there. It's your boy Kyle. I'm out.